Hello and welcome. In this video, we will look at who trades the Forex market. There are four major players of the Forex market, and the first on the list is the banks. And by saying banks, we don't mean just any bank. We mean the super banks like the HSBC, the JP Morgan, Barclays Bank, Deutsche Bank, and a long list of super banks like that. We also have international companies like Apple, Google, Tesla, HP, and a very long list of international companies that trade the forex market. We have governments and central banks like the Federal Reserve of the United States, we have Bank of Japan, we have the Reserve Bank of Australia, and since we have different countries in the world and these countries have central banks, so these central banks also participate in the forex market, so the list is also very long. And we have speculators, these are the hedge funds, and it also contains me and you. Have you ever asked yourself why these people trade Forex? First of all, let's talk about the big bank. The big bank trade Forex and they are, in fact, the facilitator of Forex. They play a big role in the fluctuation of currency. Because of this, they are called the flow monster, they are called the big boys, and they have different slangs that Forex trader call them. And also, they don't just facilitate Forex just because they want to, but because they have to. Now, this would make sense because they need to process funds for clients. Bank are not just bank because they have money. They are bank because people trust them with their own money. And because people trust them with their own money, these people need access. I stay in Nigeria. I want to be able to buy something from a vendor in the US, in the UK, and I can do this just by a single click on my phone. And this is possible because the bank is ready to take my naira and the bank is able to get the dollar across to his seller. And by doing all these little transactions, it becomes huge because a lot of people in a lot of countries are also doing that minute transaction, which actually leads to a very big fund. And this fund have to be traded, dollar have to be bought, something has to be sold. And by taking all those trades, they facilitate the forex market. The banks also make money from spread. For example, let's say you want to travel to a particular country and you have to convert your money to that country's currency. Let's say you need $1.2 to get £1 and you need £1 to get $1.2. Now, if you have pounds, let's say you have £1,000, if you are converting to dollar at that exchange rate, it means you have $1,200. If you are to convert that $1,200 back to pounds immediately, they will not give you that 1.2 exchange rate. Instead, it can be maybe instead of 1 to 1.2, it can be 1 to 1.15. And then if you want to convert it back, instead of you having 1,000, you can just have maybe 900 and something. And that little gap there, that's the spread, and that is the profit of the bank. So also the bank speculates just like every other person when they see that okay, based on certain events or based on the market structure, that this currency is likely to fall or is likely to rise in value. They can buy or sell that currency just to make profit as well. And the second on the list, we have the international companies. The international company do this so that they can be able to make foreign purchases. A good example is Apple and Google. They make phones, and to make these phones or laptops, there are some components that they don't have in the country where they are, the US. So they have to actually purchase some of these from India, from China, and to make all these purchases, they have to pay those people in their own currency. And to pay them in their own currency, they have to convert their own United States dollars to the China or the Indian's currency. They also participate in the forex market just to make international sales. If they are to sell to someone in another country, either them or that person will have to do forex. For example, let's say you want to buy phone from Apple, and let's say you can just order from the Apple main website. So it's either you are being charged your own currency or you are being charged their own currency. Either way, is either your bank will do the forex for you to be able to purchase something from their currency, or Apple will make itself available to you by localizing themselves to your own, probably your language, your currency, and doing all of those things. And when they now get the currency from you, then they now do the forex their own self. Companies also participate in forex so that they'll be able to pay international staffs. They can have staff working for them all over different places in the world. And because currently we have a lot of remote workers who are actually being paid in their employer's currency. But international companies might also have branch in a particular country, and those people will be paid in their country's currency. Now we have the government and the central banks. Basically, the reason why these people participate in the forex market is to stabilize their currency, or if they want to increase or decrease the value of their own currency. Now, you might ask yourself, why would any country want to decrease the value of their own currency? Some countries do this if they have goods that they make in their home country and they want to attract foreigners to come and be buying from them. So they can decrease the value of their currency so that it will become cheaper to the foreigners and they can be able to buy from them. And countries might want to increase the value of their currency if they have a lot of purchase to make. Let's say a country know that it's going to need some of these resources in 3 months' time, or in a year or 2 years' time. They can slowly be increasing the value of their currency so that in that 2 years' time, their currency will have high purchasing power and they won't have to spend more of their currency to get all the things that they need. And most importantly, every country have to be able to stabilize their currency. Whether you want it to increase or you want it to decrease, any point you want it to increase to or decrease to, you have to be able to stabilize it at that level. This is why trading forex is important for central banks, because they might actually be hedging positions such that if an event or a news or something is coming and that event can affect their currency, they can be able to fight back because they also participate in the forex market. And because they participate, they can have edge positions, which you will understand later in the course, which is like holding the buy position, holding the sell position. And because the news is coming, okay, people might actually want to sell this currency, but we don't want it to fall, then we can actually open another buy position or close some of our sell position just to make the country's currency stand strong. And this is something they do all the time. Another way they actually achieve this maintaining the value of currency is through interest rates or some other news release. When you save your money in a particular currency for up to a year, most currency will actually give you interest and some don't give. So let's say the countries that give interest like 2%, 5%, 0.5%, very small interest, but it's just better for your money to just be in the bank and you still make something than making nothing. So these people, they entice people with their interest. And when more people are buying your currency, it means the demand for that currency is high, and so will the value be. So let's say a currency is depreciating and the country wants to make it appreciate, and that currency have an interest rate of 1%. The country might just increase the interest rate to like 2%, 2.5%, just to make people feel like, okay, let's buy this currency, it's appreciating. And by people buying that currency, the currency increase in value and people get to make money because the currency has now increased in value, plus they get 2.5% at the end of the year. Those are just the way that the government and central banks participate in forex. They also participate in forex because they need to pay debts. If government want to execute a project and they don't have the money to execute that project, they can borrow money from other countries or World Bank. And when they borrow this money, after they are done doing that project, they need to pay back the debt. If they have to pay back that debt, they have to convert that money, their own money, into the country's money, the country that borrowed them that money. So by converting their own money to that country's money, they have participated in forex. Now, they also do this to perform international trade. Countries might want to sell their oil or some of their resources, or they might want to buy resources from other countries. To achieve this, one of the countries have to participate in forex, probably the country that is buying or the one that is selling. And also, Countries need to manage their own foreign exchange reserve. If people are buying stuff from a particular country or they are traveling to a particular country, it means that people would demand to have that currency at hand because they either need it to make purchases or to travel. Now, to do all of this, it means people will be buying that currency more. And just like every other wholesaler, when you sell something and people are buying a particular product more, you want to make sure you have that product in stock so that you don't run out of stock. Now, the same thing goes to these forex reserves. Banks have to buy the currency people are actually getting more. They have to like buy it. They have to make sure that at every point in time they have these currencies available. The last on the list, we have the speculators, and these people are just here to make profits. They want to know if a currency is appreciating and they want to buy it, or if it's going to depreciate and they want to sell it. That is their own reason for participating in the forex market. And this is the group that you want to be after finishing this course. Up next, we'll be looking at the forex trading session, when to trade the forex market. And if you like this video, kindly give it a thumbs up and ensure to subscribe for awesome videos like this. Thank you.